So they said inflation is the number one risk on investors' minds, according to 32% of investors, down from 41% in May, followed by geopolitics, which is the stuff going on in the Middle East, and the U.S. presidential election. Okay. For the moment, however, the market view appears sanguine, according to the survey. Roughly two-thirds of money managers are in the soft landing camp, where the economy slows but doesn't tip into a recession, firmly matching the consensus view. Okay, so they said 80% of investors anticipate at least two or more interest rate cuts over the coming year. So again, if you while I did lay out that doom and gloom scenario to say that in November 21, when the market was going way up, that it did go down the following year, that doom and gloom scenario does not apply necessarily, may not apply to this situation, because in that situation you had a rising interest rate environment which artificially deflated stock prices, whereas now you have an environment where rates are going to be cut, which creates a level of optimism based on the expectation that once the Fed finally commits to start cutting interest rates, it will put stock prices up. Most economic valuation models for stock prices or any other fundamental asset out there pretty much are structured in such a way that when the interest rate drops, the price of the asset goes up. That will be true for your house. It will be true for an investment. It's true for a stock. It's true for almost any asset in the universe. They're all valued based on the same economic model. And in that model, when the interest rate drops, the it's what they call the discount factor. When that discount factor declines, the price of the asset tends to bubble up a little bit. And that's why stock prices did so well during that 10 years before the pandemic, because you had what they call an easy money regime, where money was floating around everywhere and it ended up just pushing up the price of everything. And it also changed investing behavior. There were a lot of people. I remember I sat on a panel with a guy that I really liked. His name was 19 Keys. And I remember he was arguing with another guy because the guy said, I don't really like to take on a lot of debt. And I remember 19 Keys said, no, you have to take on debt because you put your money in the bank, you're not going to get any interest. And that was the argument I heard a lot of people make. But I said, actually, that's because of this environment that we're in right now. The Fed has made it that way. I think there are going to be some problems with that. I really do. I think long term is going to be some challenges. And also, what it did was the fact that money was so easy to borrow during that 10-year period from, say, 2010 to 2020. A lot of people invested in really stupid projects. There were a lot of multi-billion-dollar businesses and funds that were created that deflated and died. Like I know a lot of the people in our community were talking about the Tulsa Fund, about $13 million, which was very, very bad. But you're talking about $100 billion projects that just died because it was so easy for banks to get money. So access to capital actually is the thing that I would love to see the most for any investor out here, because it's access to capital that builds wealth. It's not necessarily having money, it's having access to other people's money. That's why Elon Musk was able to build Tesla. He had access to other people's money. If he didn't have other people's money, he never could have made money on his own. All right, so anyway, let me keep going. All right, so the I'm gonna look in the Q&A section. And a reminder, in case you don't come to Money in the Morning, our financial consciousness training, where we discuss the art of economic elevation every morning, just get on the text list. Text the word morning to 87948, and the live trainings are free. So just text morning to 87948. We do that every single morning at 10 a.m. Eastern. And also, earlier today, I was mentioning to you all that the All Black National Convention is going to occur October 25th through the 27th in Lombard, Illinois, which is right next to Chicago. So if you're B1 and this is your thing, and you want to hang out with other people like us, then feel free to come to the convention. I hope you'll join. You can go to allblacknationalconvention.com, and there's a discount code that's in effect for 48 hours. And the code is 50 off A, B, and C, all one word, 50 off A, B, and C. If you go to allblacknationalconvention.com and use that code, you can get half off anything that you want to get. All right. So Tawana says, what is your take on investing with AI, and what is the best platform? I think you can do a lot with regular AI platforms, Perplexity, ChatGPT. I think that investing with AI can be beneficial because AI is pretty smart and they can really help you work through a lot of issues. I think also AI is just something everybody should understand and really, really dig into, because AI is going to be the wave of the future. In fact, I made a list of stocks that you can invest in that will make money as AI grows. I believe in this list. These are all companies that I've invested in. I think I invested in every single one of them. So if you'd like to get that list of stocks, just text the word stock to the number 87948. Text stock to 87948, and you'll get the list. What platform should you use as a beginner? I use Cash App. I was thinking about Webull. I think both of those are fine. I like Webull better than Cash App. I think as a beginner, it really which platform you pick doesn't matter so much. Most platforms have good education and good explanations in terms of how to use things. They have great customer service. E-Trade's customer service is great. Schwab has great customer service. Fidelity, even Robinhood's gotten better. And so if you want to get started, if you haven't started investing yet, which I really hope that you'll do, if you go to blackwealthmasterplan.com, there's a free ebook there called the $5 a day plan that can help any family go from any income level, any socioeconomic level to middle or upper class in about 10 years actually. So feel free to go to blackwealthmasterplan.com. I talk about the $5 a day plan a lot because I just know the power that it has. I mean, if you think about that, in the first decade, if you just invest $150 a month, which is about a fourth of what a lot of people spend on their car notes. A lot of people spend four, five, $600 on their car note. So I said, if you just put $150 a month in the stock market for yourself and for your kids, then your kids won't suffer financially when they get older. They won't be like all these other millennials and Gen Zs that can't pay the bills. That won't be their story. Their story will be my mother and father invested for us a long time ago. So now I've got $100,000 liquid sitting in the bank just in case I need money.